I hope everybody's staying safe and healthy. I'm Frank Boudoulet, audit partner, financial services, and now I'm in charge of our SBA loan assistance group. So I want to hopefully we can clarify some of the confusion that's out there. There's a lot of different postings online when you read about these different programs, and there's confusion on what's in and what's out as far as qualified payroll costs and how do you calculate the forgiveness on the 7A loan. So first thing is look at our website. Our website, Witham.com, has a lot of good information. When you go to that front page, you'll see COVID-19 Resource Center, and then next to it is SBA Financial Assistance Services. Click there. There's a lot of good information. We have a lot of articles. We also have some of the forms from the SBA downloaded already to help you prepare some of this information and to review. So let me start with the SBA and the assistance that the SBA has. The first recommendation is talk to their current bank relationships. Ask for a deferral of the loan. All banks will probably do that right now, so at least that helps with some of the cash flow problems that your clients would have. So defer some of the loans with the loan officer. The SBA assistance. So there's a couple of programs out there that the SBA already had and will be enhanced with this new bill, the CARES bill. So the first one is the disaster assistance loan, which impacted by COVID-19. They have the Economic Injury Disaster Loan Program, EIDL. They also, on the new bill, will have an emergency EIDL grant. We'll talk about that in a few minutes. And then the standard 7A loan program with the amendments under CARES. That's the one that everybody's talking about that has the forgiveness of loan. There's also the express loan, which was increased from $350,000 to $1 million under this new bill. So the EIDL loan, so who's eligible would be sole proprietors with or without employees, independent contractors, business cooperatives, ESOPs. They are eligible to get this EIDL loan. This is a loan. It does not get forgiven. It's up to $2 million. That $2 million can be waived by the SBA. Depending on the number of employees that you have, you work that out with the SBA. This loan, you go directly through the SBA and through the SBA's website. Unfortunate part is the SBA website keeps crashing, but we do have on our website all the forms that you would be required to be prepared. So you can find the forms there, and then once you get onto line, you can start completing the information. The interest rate will be 3.75% for interest for businesses and 2.75 for nonprofits. The term is up to 30 years. Under this new CARES bill, they're going to waive the credit elsewhere clause, which basically was if you could find credit somewhere else, you would not qualify for this loan. That's going to be waived. Personal guarantees for loans under $200,000 will be waived, and the applicant has to be in business for at least one. Doesn't need to be in business for a year, but has to start it by January 31st, 20. So if it wasn't in business for a full year, you can still get it prior as long as you were in business before 1/31/20. The SBA also approved the loan solely on a credit score, so you don't need to have tax returns. They're kind of waiving that with this new bill. So what's happening now under that, with this new bill, what will happen is if you do apply under the EIDL, the SBA is required to send within 3 days up to $10,000 upon submission of the application. Not required to be repaid. If approved, so you get it approved under this loan, under the Paycheck Protection Program, that $10,000 will be reducing the forgiveness amount. So this is a 3-step process online. So again, you go online, you go to the SBA website, you can mail the forms in, but here are the forms that are required. Right here, you'll have to have personal financial statements. Some of this will be waived under this new act, so we'll wait and see what happens on that. So the second step would be once you send all the forms in, a credit officer will contact you. They'll review all of the information. It takes about 2 to 3 weeks for that process to occur. We have a couple clients right now. They're in week number 2. They're still waiting to hear back from the SBA. So we're not sure what's going to happen with everybody throughout the country applying for this loan. There could be a slowdown and some resource issues with the SBA. So step 3 would basically be that once the SBA approves the loan, they'll send it to you. You'll sign it. Once you send that loan document back, the SBA will send the first rounds of funds up to $25,000. The caseworker will then work with you to determine how much your cash needs are for the next several months. I want you to be aware that under this loan, there's no formula. The SBA determines your needs based on the information that you send them. So there's no magic formula for this loan. So This is the 7A loan program. The new bill that's coming out is calling this the Paycheck Protection Program, which everybody's talking about, where I think there's a lot of confusion. So again, this is open to businesses, any business with less than 500 employees, and also any business that's considered a small business by the SBA. And they have a industry code, because there are some businesses that would qualify as a small business with 1,500 employees. So please take a look at that guidance. Again, that's the code is on our website, so you can look up on our website to find out what industry you're in and see how you qualify to be a small business. It's based on sales revenue, and there's another based on number of employees. Sole proprietors are included. The old draft did not mention about sole proprietors or independent contractors. This new draft does include them. I guess it clarifies it, which I like this new bill. It clarified a lot of things that we're getting questions on. It also realizing that the accommodation and food service business has more than 500 employees in total, but may have several locations throughout the country. So it's based on the location. So if you have a location less than 500 employees, you can qualify under this program. What's important is that the covered period they decided was February 15th to June 30th, 20, and that plays a part in a lot of the calculations that are done. What is a payroll cost? Everybody wants to know what's covered, what's not covered to qualify for the loan. It's unclear right now. I got an email last night from a bank, and it's what I read the code or the law is that it covers employees up to $100,000. So you basically make a list of all your employees, anybody over 100, you stop at 100 on an annual basis. The bank interpretation last night was that any employees over 100,000 get excluded. 100% of their salary gets excluded from the total payroll cost. That doesn't make any sense to me nor many other people. What's included there is salary, wages, cash tips, vacation pay, sick leave, health insurance, premiums, any retirement benefits. Sole proprietors, independent contractors, up to $100,000 of their salaries are included. It excludes any sick leave or family leave that you get under the Families First Coronavirus Response Act. So again, they don't want double dipping. So if you're getting monies, relief in another area of the law, you're not going to be able to add that to your payroll cost. So the maximum amount that you can get is $10 million. So the way you calculate this amount is you get 2.5 times your average monthly payroll costs incurred 1 year before the date on which the loan is made. So if you think about it, if you get the loan on April 1st, you're going to be looking from May 1st of 2019 through April 30th of 2020. Outstanding loans it's all those costs that we just talked about times 2.5%, plus if there's any other loans that are outstanding with the SBA. There is some confusion here, because if you file for that EIDL loan we talked about earlier, the way the law is written that I read it is that you cannot qualify for this loan. Now, I've been looking at banks putting out information and some law firms, and they're saying, no, you can apply for both. When you get the first one from the disaster loan, it'll just be subtracted from the amount that you get for the other loan, or the PPP loan will come in, you'll get that loan, and it'll pay off the first loan. A little confusion there. We're not 100% sure where that is. Hopefully there'll be some clarification over the next couple of weeks. So allowable uses, and you can see this slide, is payroll costs, costs for continuation of healthcare benefits. It's important to know what is allowable, because this comes into the calculation for forgiveness of debt, rent, utilities, and interest on any other debt. So that's what the costs that are allowable under this program. So a couple things: the waiver to get this loan, personal guarantees you do not have to give. There'll be no collateral is required, and the fees are all waived. Typically, there's a 1% to 2% fee charged by the SBA. The banks are supposed to not charge you any fees for the loan that they are granting you. 100% of the loan is guaranteed by the SBA. The maximum maturity is 10 years from the date that they forgive the loan. Now, in order to get the loan forgiveness, you have to ask for it. You have to file certain forms with the bank and ask them that you want to have the loan forgiven. And from that point that's forgiven, you have 10 years to pay back the amount that's not forgiven. The interest rate cannot be more than 4%. The lender can provide a deferral of up to 12 months of the actual payments. So now loan forgiveness, this is where I'm getting a lot of questions. So it's a covered period, is an 8-week period after you get the loan up until June 30th. So you're looking at the costs incurred at that point in time. The amounts eligible are your payroll costs that we talked about, interest on mortgages, rent, and utility payments. So all those get added in, even though you're not getting monies for interest, rent, and utilities. You will be able to use that cost to offset the loan that you receive. The amount of the forgiveness should not exceed the principal, obviously, but the reduction is based on the number of employees. So basically, there's two pieces to reduce the forgiveness amount. If you reduce the number of employees that you had, and they're using a period from January 1st, 2020 to to February 29th, 2020, or you can use February 15th, 19 to June 30th, 19. The average number of FTEs during those two periods, and up to the borrower decide which one benefits them, obviously. So what they're looking for here is if you reduce your employees, so you're getting monies based on a full year of average of a full year of salary. They want to make sure you're not reducing the employees and keeping that money. So if you had 10 employees when you calculated the amount of the loan, and now you're down to 8 during this covered period, 80% of the amount that you received will be forgiven. The other 20% you'll have to pay back. There's also a salary reduction. If you reduce somebody's salary more than 25% than what you were paying them, that amount also, the excess will be subtracted from the forgiveness. So there's chances are that you will get some monies, but it won't be all forgiven. And again, the logic behind that is you didn't need the money to keep the employees in business. They keep the employees employed. So that's what they're looking for. So if you receive $200,000 and you can maybe forgive 150, the 50 you have to pay back. But again, that should be excess money that you did not need to cover these costs. The good thing is, because what's happened is, and I like this part of it, what if you fired somebody? So if you fired somebody or laid them off because you had no business, if you rehire them before June 30th, they can then count for your FTE for this calculation of the reduced wages and the reduced number of employees. So that's a great provision that's in there. Hopefully it stays when this gets through the whole process and it gets finally signed, because that way, if you have let somebody go, you can rehire them and they can get counted in, so you don't have to forgive that debt, which I think is really critical right now, because a lot of people, a lot of businesses probably laid some people off or furloughed the salaries. So that's a good provision.
Hopefully, this has been informative and will help clarify some of the confusion that has been out there. Have a good day. Stay safe. And if you have any questions, please go to witham.com to find some more information. Thank you.